Welcome to the Dip Dive. Today, we're pulling back the curtain on Shopify, ticker SHOP. It's a company that's seen its stock, well, soar by nearly 30% in just the past month. But here's where it gets really interesting. Beneath this, impressive performance, there's a bit of a fierce debate among investors. Is this growth story still just getting started, or has the market maybe already priced everything in? Our mission for you today is pretty simple. We've dug through a load of reports, Q2 2025 earnings, financial statements, analyst insights, the latest news, all of it. We want to cut through all that noise, equip you with the key insights you need to understand Shopify's recent results, its competitive edge, and crucially, that ongoing debate about its stock valuation. Okay, just a quick snapshot before we really dive in. As we're recording, Shopify's stock is hovering around $149.61 USD. And remember that almost 30% gain we mentioned? Yeah, that's real. At its heart, Shopify is a commerce company, right? Giving this powerful platform to millions of merchants across the globe. So let's unpack this recent performance.
Yeah, and what's really compelling is how Shopify delivered in Q2 2025.
Yes.
I mean, they reported GAAP revenue of $2.68 billion.
Okay.
That's a really robust 31% jump year over year.
31%. Wow.
And their gross merchandise volume, the GMV, the total value of orders going through their platform, that also surged 31% year over year, hit an impressive $88 billion.
$88 billion.
These aren't just like big numbers thrown out there.
Yeah.
They reflect a company that's not just growing, but it's really executing consistently on its plans.
And beyond those headline figures, what really caught my eye was the free cash flow. This is their 11th straight quarter of positive free cash flow.
That's right.
$422 million, a solid 16% margin. I mean, that's a seriously impressive track record. What does that kind of consistent cash generation tell you about their underlying business? Maybe something the other numbers don't immediately show.
That's a really crucial point. That consistent free cash flow, it's a powerful signal of, operational discipline, for one.
Mm-hmm.
And maybe more importantly, it shows the business is kind of self-sustaining.
Right.
They're not just growing revenue, they're turning it efficiently into cash. And that's key, for funding future growth, for resilience, without always needing outside money.
Makes sense.
And digging just a bit deeper into that GMV growth, a lot of it came from strength in North America, especially with their Persor demands. Plus merchants, those are the bigger enterprise clients.
Okay.
And we saw really significant growth in Europe too. GMV there surged, get this, 42% on a constant currency basis.
42%. Incredible.
Yeah, it really highlights strong global expansion and adoption.
So Shopify really does seem to let merchants do, almost everything. Setting up the store, managing payments, shipping, across pretty much every channel you can think of.
Exactly.
Web, mobile, physical stores, even social media. It feels less like just a tool and more like a whole operating system for a business.
That's a great way to put it.
How does that kind of end-to-end approach really change the game for merchants? And how does it play into their competitive advantage?
That's precisely it. That deep integration, that comprehensive offering. That's what analysts talk about when they mention Shopify's narrow economic moat.
Ah, the moat.
Yeah, and it's not just about, convenience. It's about creating these incredibly high switching costs and network effects, too.
Okay.
Once a business is really embedded in Shopify's unified platform, inventory, payments, marketing, all in one spot, it becomes hugely costly and disruptive to even think about moving somewhere else.
Right, it's sticky.
Very sticky. Think of it like building this deeply integrated nervous system for the business. That stickiness is a powerful barrier, and it's getting stronger with their successful upmarket strategy, bringing in big names like Starbucks and Miele. That just proves the platform scales and offers undeniable value, making those switching costs even bigger.
That sticky ecosystem definitely sounds powerful. So it's not just about getting new merchants, but kind of future-proofing the ones they already have.
Yeah.
How does their big push into product innovation, especially with AI, play into making that moat even stronger? They've been talking a lot about this agentic commerce infrastructure and tools like Sidekick and the AI store builder.
They really are trying to build the future of commerce, aren't they?
Yeah.
Beyond the buzzwords, their AI strategy, especially that agentic commerce infrastructure, which includes things like catalog, universal cart, checkout kit.
Yeah.
It's not just automation. It's about creating these intelligent components that can almost act for the merchant.
Okay, interesting.
Adapting, enabling sales across totally new digital landscapes. Imagine intelligent modules that just plug into any new commerce channel. It ensures merchants can thrive wherever commerce goes next, social platforms, maybe even the metaverse.
Right.
And tools like Sidekick, their AI assistant, and the AI store builder, they're designed to fundamentally change how merchants interact with customers in this AI-first world. It feels like a proactive leap, not just a small step, keeping their merchants ahead.
And it's not just tech innovation, right? It's also about strategically expanding where they operate. We mentioned them attracting big brands upmarket, but they're also pushing into totally new areas like B2B, where GMV was up, what, 101%?
A staggering number, yeah.
And offline retail, too, GMV up 29%. Even into seemingly niche places like mining services with Bort Longyear. What's this diversification tell you about their strategy?
Well, this diversification is critical. It significantly broadens Shopify's total addressable market, their TAM.
Right, the TAM.
And it diversifies who their merchants are, moving beyond just the traditional small and medium businesses. It's not just adding new types of businesses. It's adding new layers for growth, new revenue streams.
I see.
For instance, look at Shopify Payments expanding into 16 new countries this year. That nearly doubles its reach.
16 new countries.
Yeah. And introducing multi-entity support.
Mm-hmm.
These are key drivers for growth in their merchant solutions revenue. They're making it easier for global businesses to operate smoothly,
Got it.
which in turn fuels Shopify's own growth by getting deeper into the merchant's entire operational flow.
Okay, now for investors, despite all this really positive news, there seems to be a bit of a dilemma. Our fair value estimate for Shopify, it puts it around $99.42.
Mm-hmm.
But the current trading price, as we said, is near $150, maybe even $155 based on the earnings review figures. That's a pretty significant gap.
It is a significant gap.
What does that discrepancy suggest to you? How's the market looking at Shopify right now?
That gap is, well, substantial. And it really suggests the market has already priced in a lot of future growth and innovation, a significant amount. So while the company's fundamentals look robust, analysts, on average, are projecting a price target around $121.67 over the last 6 months. But the recent individual targets, they range wildly, like $100 all the way up to $185.
Wow, that's a big range.
Exactly. And that wide range itself tells you there are very different opinions on just how much of that future growth is already baked into today's price. It's not just simple overvaluation. It suggests the market isn't just expecting growth, but maybe hypergrowth.
Right.
Maybe factoring in breakthroughs that haven't even fully happened yet. It's a bet on the future, definitely. But the question is, how much future is too much to pay for now?
That's a great way to put it. So let's maybe talk about some specific investor concerns that might be contributing to this caution from some analysts. The sources mentioned a few things. The impact of those extended 3-month paid trials on subscription solutions growth, which that sounds a bit weird, longer trials impacting growth. Then there's pressure on gross profit. Q2 margin was 48.6%, down from 51.1% last year, attributed to things like higher hosting costs, the PayPal partnership.
Right.
And finally, they're forecasting increased operating expenses for Q3. What's Shopify saying about these specific points? How are they addressing them?
Yeah, they've addressed these pretty directly. On the extended trials, management sees them as strategic investments for long-term retention.
Okay, strategic.
Their thinking is basically giving merchants more time to really explore and build properly on the platform makes it much more likely they'll launch successfully, which ultimately means better long-term success, higher lifetime value for Shopify, even if it slightly dampens that short-term subscription revenue growth rate.
Right, long game versus short game.
Exactly.
Yeah.
On the gross margin side, yes, it is lower year over year.
Yeah.
But they point out it's still above their historical median,
Okay.
and they don't expect this trend to change dramatically right away. The PayPal partnership's impact on merchant solutions gross margin, for instance, that's seen as temporary too, likely persisting through Q3.
Got it. Temporary.
And for operating expenses, those increases are mostly planned strategic investments, marketing, higher pay for key people in areas like R&D, and covering growth-related losses in their payments and capital businesses as they scale. They really emphasize these are calculated investments to fuel future growth, not really a red flag, especially when you look at their strong free cash flow generation.
That reframing of concerns into investments definitely shifts the perspective a bit.
It does.
But thinking about the bigger picture, the broader economy, we hear about macroeconomic uncertainties, potential tariffs globally. How resilient is Shopify's actual merchant base proving to be? Have they seen any real impact on demand or cross-border trade?
Well, the company confirmed that its merchant base stayed remarkably resilient through Q2 and even into early August. They seem to be adapting well to the economic shifts.
Good to hear.
The U.S. market actually showed accelerated growth. And crucially, they haven't observed any significant hit to demand or cross-border GMV because of tariffs or other economic headwinds.
Okay.
In fact, that cross-border GMV figure, it stayed consistent at 15% of the total GMV.
15% stable.
Yeah, which suggests pretty strong and persistent global demand for whatever their merchants are selling, regardless of these external pressures.
Okay, so we've covered a lot of ground here. Impressive financials, growing moat, strategic innovation, market expansion.
hmm
What does this all boil down to when you look at how analysts are positioning themselves? Because you see some really different headlines out there, from is it too late to buy to downgrade is due. How do these bull and bear arguments usually stack up?
It really is like a tale of two cities in the analyst community right now. But what's interesting is both sides tend to agree on the core strengths.
Okay.
The bull arguments, they often focus on Shopify's unified commerce leadership, how its integrated platform creates this really robust ecosystem, strong network effects, deep merchant loyalty.
Right, the stickiness again.
Exactly. They point to the persistent innovation, especially the deep AI integration, which they see as future-proofing the platform and actively expanding what's possible in commerce. Then there's the robust financial health, that consistent free cash flow generation we talked about, provides a solid foundation for investment. Plus, the successful upmarket strategy, attracting big enterprises and expanding into new high-growth areas like B2B, they see that as significantly broadening the TAM.
Makes sense.
And finally, global expansion and getting Shopify payments into more countries are seen as key drivers for really substantial long-term growth.
Right.
Now, on the flip side, the bear arguments primarily zero in on that elevated market valuation.
The price tag.
Yeah. The current stock price, as we discussed, seems to have already factored in a lot of future growth. That creates a substantial premium over fair value estimates and potential downside risk if those high expectations aren't met perfectly.
Okay.
Concerns about gross margin compression are also frequently cited. Those recent trends showing pressure on both subscription and merchant solutions margins, due to hosting costs, longer trials,
Right.
rising operating expenses, especially forecasted to outpace revenue growth in the short term, that's another point of caution. And those temporary headwinds from the extended paid trials, while strategic long-term, they are dampening current subscription revenue growth.
So different interpretations of the same data, really.
Pretty much. Ultimately, both camps acknowledge Shopify's strong execution, its strategic position in this evolving commerce world. The fundamental split is just whether today's stock price accurately reflects its intrinsic value and future potential, or if maybe the market's being a bit too optimistic, betting on a future that's perhaps too far out or uncertain to justify the current premium.
Right. So to kind of synthesize this deep dive then, Shopify keeps showing strong operational performance. Impressive revenue, GMV growth, that consistent positive free cash flow track record.
Yep.
Its competitive moat looks compelling, getting stronger with relentless innovation, especially in AI, and the constant expansion of its whole ecosystem. The company's successfully diversifying its reach, bigger enterprises, new verticals. But that ongoing debate around valuation is significant. Many analysts seem to think the market has already baked in a lot of its future success.
That's the crux of it.
It really leaves you with a thought, doesn't it? Given Shopify's relentless push with AI and its growing global footprint, how might future commerce platforms totally redefine value, both for merchants and for investors? And is the current valuation maybe just a reflection of an accelerated future that the market thinks it can already see? Something to chew on. This has been The Deep Dive. We really hope you feel much more informed about Shopify now. And hey, if you found this deep dive useful, please do hit that subscribe button and ring the bell icon too. It really helps support us and make sure you won't miss our next deep dive.